Good morning, traders. Take two. My computer messed up. So please like me, Gumby9662C on Twitter if you get a chance. Like my video link on Twitter, and like it on YouTube if you get a chance. And I do appreciate those comments below my YouTube channel. If you guys are seeing something that I'm not seeing, I really appreciate some feedback. If you got questions about some stuff, now I follow only the core stocks. So if you ask me an off the wall ticker name, I really couldn't do much about that. But I stick with the momentum names as that I'm a pure day trader. Okay. So bottom line is here we go. Kicking off SPY here. Things that are happening here. So we found resistance right where we should find resistance. This prior high right here on SPY. It turned out to be a point of control. The first week, the last week of December, first week of December, last week of November, first week of December, it was resistance here on SPY. So we came into a monthly resistance level on SPY, found rejection at that point yesterday. Heads up on that. So I'm very critical monthly resistance area. Also, if you draw a little arrow on here, you see right here the lower high downtrend scenario is on the close is still very much valid. So we need to start accepting prices back over yesterday's point of control, or this week's current point of control is 598. Okay, so these are weekly webs. This is a weekly volume profile. So we really need to start accepting prices over 598. That is so far the current week point of control for the bulls to reassert pressure to the upside, in my opinion. Okay, I got two uh, Andrews pitchforks on my chart here drawn out, and I'm going to go on a bigger time frame to show that to you real quick. 1 second. Oh, before I do that real quick, I do want to also mention here, and if I can zoom in. Okay, here we go. So basically, what we're kind of looking at here, we were looking at a um, uh, wave uh, one, two, all of this being three, and a potential wave four, uh, hopefully completing sometime today, setting up for a potential wave five to the upside. Heads up on that. What we're looking at here, up here around the 602 or so, we got a volume profile on our weekly time frame around the 602. That would be our next resistance level, but we'd also be breaking above that downtrend line here on SPY, so that it could very easily blow right through that. But that'd be our next resistance level. But it'd be around the 602 here on SPY. Another reason that we found some sell side pressure in the markets, we were beyond the expected move for the week. And I do want to point out the markets are acting very efficient here. We are rejecting where we should reject. The Elliott wave count the last 2 weeks of the year, everything is actually hitting where it's supposed to hit. If you're an Elliott wave, somebody who's following, it's hitting awfully close, if not right on the penny, where even on that down move down, which typically if you're having a bearish correction in the market, you're going to overshoot your target, uh, Elliott wave targets. Instead of they were hitting, they're right on the money. And actually, I was looking for a down wave into the end of the year, and we came right down to the 20-week moving average on SPY, or yeah, 20 SMA on SPY on the weekly, and exactly where my target was for the 5 wave down. And now we're doing a potential 5 wave back up. So it's actually very efficient right here right now. So a lot of people are finding it really crazy, but this is the way the markets are actually supposed to work currently. So it's just we're so used to markets not working the way they're supposed to, blowing through the expected moves. This is the way how the market actually gets paid, by being working efficiently week after week after week. This is how Wall Street gets paid. and you mom and pops and stuff coming into this market, you got to be aware we've entered a realm of market efficiency, which we don't have any idea of knowing how long this is going to last. So be very mindful of that. But like I said, we rejected the market maker move high, and now and we're fighting this downtrend to see if we can actually establish and break this downtrend and try to push to the. We got the double bottom down here. Uh, Now we're looking for a double topping scenario. That, like I said, 602.45 is the actual to the print. What we'd be looking for, 602.45 would be to the print what we'd be looking for the double top potentially by the end of the week. But then you're going in the outside the expected move, which very easily could be happening. So I just wanted to point that out. Some of the different trends that I'm seeing here, and we do have a breakout of this anchored VWAP or of this Andrews pitchfork as of yesterday. So the bias should still remain to the upside unless we start violating yesterday's. Well, really, if we start violating yesterday's lows, then we can start looking to something here. But right now, opening up fairly good here. Nothing here suggests to get too worried here. Similar situation on the Qs. Even with the great news out of Nvidia, all they did was take us up to the expected move high for the week. So here we are, great news, but the Qs didn't break out of the expected probabilities for the week, so it shouldn't have been it should not have been no big surprise. That's where they were going to take us when the momentum took off in a potential wave three in on the Elliott wave count, because we have a very similar count on the Qs. Qs and SPY have been pretty much the counts have been in step. Okay. Now, if we go down to the 1 hour and put my market webs on here real quick, and we'll zoom in here real quick. Some things that I did notice here. This one here is a little bit different. We had this high that happened on the first week, it's as well December 6th. So I'm not for sure. That'd be second week of December. We had this high right here from the prior week. Okay, here on the Qs. Uh, and we have a point of control that developed out here the week of the 22nd. That actual high there. So it's a very similar situation here. We found some resistance right there. Very similar situation. Having a lot of trouble, you know, the S&Ps are having trouble regaining any of the value, the bullish value for December, the bull side value for December, where the Nasdaq is still firmly still inside that Nasdaq or the December value. Okay. Things that are going on here, we do have expanded out from this downtrend, so we are kind of basing here outside. That becomes new support. If you go ahead and put a line right here, this trend line right here should become new support. We do not want to be violating this trend line going forward here, so be very mindful of that. Don't want to be violating that trend line, or even that back check there from yesterday. We really don't want to be violating that. Okay, uh, so we definitely want to keep that in the back of our minds going forward here. Okay, now I'm going to zoom in here real quick, and I'll give you that counts again. Okay, similar situation. Uh, you got, 1, 2, big 3, 4 with the 4 count with an extension. We didn't violate that count, so it's still a valid 4 count. That's 4. Well, that's not 5. I typed 5 in here. 5 should go up here. So 5, we're looking up here. See this volume up here? Okay. So up here around 530 area, that's actually where we're looking for 5 to be going here, and I'd be outside the expected move for the week, out above last week's value value area high as well. So be very mindful of that. And we found resistance right there at that last week value area high as well. So if we are in a 5 wave count, that's what we are looking for. You see how the Andrew pitchfork is shaping up here. Okay. So bottom line is, if we even start poking out above day highs here today, you have to take it to the long side, the pre-market highs. So in my opinion, any type breakout above the pre-market highs, given the current trend, the way it's shaping up here, you'd probably want to be looking to the long side. Okay. Other things I'm looking for here, basically this 226 is a major level here for the IWM. Okay, we tried to look above it yesterday. Above 226, uh, we should be looking for the bullish side, and below it we should be looking more to the bearish side. And we came up, we failed. It's looking like a potential fail breakout. In my opinion, I was coming into today, given the flow that I saw last night, I was actually thinking that we were going to come in and actually opening above the 226 this morning, setting up a long scenario. But so far that this morning, that is not playing uh, playing out. So seeing what I thought was going to happen, I'm leaning a little bit more on the bearish side on the Russell here this morning. So we'll see how this all plays out in today's session. Okay. Uh, as far as the market makers go here, 1 second. So bottom line is we have not gotten anywhere on the week. So while the S&Ps and Qs are off on a tear here, we've really gone nowhere on the weekly here. So let's be very mindful of that. We tried, like I said, we tried to push up above yesterday. This is not boding overly confident here to the upside. What's going on here on the Russell? Diamonds, same thing. We have gone nowhere on the diamonds so far this week. Gone nowhere. So be very mindful of that. They came up, tried to break out, you know, you tried to push up above, it failed. So we have a failed breakout in the diamonds this morning from yesterday. I mean, if you want to really get risky here, and if we can start accepting price over 428 again this morning, this morning it's not doing it, then you can probably might be able to take a buy the dip, it still be a dip buy, a push above 428 to the upside. The risk reward does seem to favor the downside to me, so be mindful of that, just based off the trends that I'm seeing here. We are stepping up. Good thing about it is we are stepping up those weekly closes, so that does bode a little bit better. Heads up on that. Hey guys, I'm just going to finish my video real quick here with my analysis of what happened yesterday in the markets. So bottom line is there was a big press conference, a big event for NVIDIA yesterday, and it came out talking about their next generation of semiconductors, how they're going to go more into advanced robotics for the semiconductors, or to build automotives and to be put into the automotives and stuff. So they were talking about how they're expanding their framework of advanced microprocessors. Markets just loved it. Okay, guys. So we had 7 orders that came in yesterday, institutional orders that totaled 265 times the normal volume in the market. Nvidia is at all-time new highs. It's gapping up this morning. Uh, you know, it's a situation like this. You do not want to fade a situation like this. The institutions are just now getting on board. This thing's probably got some legs for several days, if not weeks. So be very mindful of that going forward here. Next to that, we have Microsoft, 7 really big institutional trades, totaling 179 times the normal trade size. Very big. So we do not want to be fading Microsoft. The institutions are doing something here. Now, ideally, maybe they're coming in here and they're just dumping out of Microsoft. But I don't know if that's the case or not. I really don't know. I mean, uh, trading with volume leader doesn't tell you the market direction. It just tells you something's happening. Okay. And all I know is there were given the trim was up yesterday and you get these big orders. Okay. Yeah. Naturally, we would think that it was buying pressure coming into the markets without looking at the actual uh, uh, the time and sales. Okay. So be very mindful of that going forward here. And one that really stood out with me is XLF. So we had Trudeau in Canada. He's stepping down as prime minister, and that and it sounds like the top runner this morning. I'm finding out is a former Goldman Sachs executive banker, and so we saw some big bids coming into XLF, multiple times. Okay, so we had 8 big ones up here around 11. Had 8 more of them around 3 o'clock. I think there was another one too. There was 3 of them. There was some big money coming into XLF yesterday, and the theory of deregulation in the banking industry. So I knew something was going on with XLF. I just didn't know what it was, and that's probably had a lot to do with what was going on yesterday. Okay, and then Apple, we had Foxconn with a blowout quarter. And so Apple really not going anywhere as of yet, but we did have some big size trades, 7 big trades in Apple that hit. So this one here might be a laggard and it might decide to join the party today. So be very mindful of that. And that was 124 times the normal trading size volume. So these are some pretty big outside moves of stocks that typically are doing very well anyway. So these are very high multiple trade size. Just be very mindful of that. Then we had also had Meta. So obviously Meta came out. He is remember Facebook was really leaning more on the Democrat side during the campaign during the Biden presidency and stuff like that. So to save face and stuff, he is adding uh, replacing 3 board members on the Facebook uh, board for more Republican sensitive board members. And that news came out yesterday afternoon and it just took off to the moon. And wouldn't you know it, the markets really liked it. 102 times the normal trading volume, and Meta going back to all-time highs here off that news. So there were some really important things that happened there, and we've known for some time now, AMD. There were some dip buyers last week were coming in there. We were getting alerted early on last week, and AMD had a really good day yesterday. Also, similar with Micron. Micron, we were getting alert signs. Didn't have as many trades, but Micron it rallied with the rest of the market as well. So yeah, there's 2 more XLF right there. Yeah, I knew there was 3 big one on XLF. So that gives you some ideas. And we had a big trade on Wells Fargo. Just the deregulation thing. So be very mindful. We have Taiwan Semiconductors really hot yesterday. So a few of the things that are happening in the markets here. So be very mindful. Maybe this helps you guys understand the market a little bit better. My analysis this morning, I sure hope it did. Now, coming into today, what is my bias? Well, I was waking up this morning thinking we might see some rotation into some new leadership this morning. I was looking forward for potential setup in the Russell, possibly coming up, after seeing the XLF stuff last night. We're still below the 226 on the Russell, so I don't know if that's going to manifest itself. 1 second here. Let's check our bonds out this morning. So here I went to a longer time frame on the ZNs here. So a lot of us think the ultimate upside that the yields are going to 5%, possibly greater, 5% to 5.7%. Okay, in that case, these bottoms here are likely to get tested, at least one of them. So we're looking for the yields to uptick, bonds come down. They're inversely correlated. Okay, but so far this week, We're holding above last week's open. Okay, so be very mindful of that. And at 10 o'clock today, we have the ISM numbers. The services ISM numbers are hitting the tape. It's really one of the most important gauges for the Federal Reserve. Okay, and it's probably going to have an impact on the bonds today. So we really want to keep a really close eye on that. That's another reason why I was looking at the Russell this morning. Yeah, anytime you're dealing with any Fed related events and stuff, the Russell can and routinely be impacted greatly. You can have on those days. So be very mindful of that going forward in today's trading session. We did have high inflation reads in Europe uh, uptick early on this morning. Some data released out of Europe. So we do have some hot inflation numbers out of Europe already this morning. So this is one of those themes that I'm really keeping a close eye on this morning. The Russell does not suggest to me that we should be, at least early on this morning, that we should be looking that the rotation trade is actually going to play out. So um, I just wanted to point this out in your trading. So thanks a lot for listening, and like I said, be sure and like me. And I appreciate everybody's time for taking your time out to watch my video. Thanks a lot.